Yeah, I don't think we're making a strong case that you want to own trend to protect against an inflationary regime only. I think the case is that you own trend because it provides time varying exposure to different broad asset class categories. And look, we can have a variety of different explanations for trend. One of them might be related to the fact that typically when market expectations change, they don't change overnight, right? It took a long time for the market to come around to the fact we were going to have a sustained inflationary shock after the first larger than anticipated CPI print. We had to have a lot of larger than expected CPI prints in concert with some fundamental narratives around the war in Ukraine, et cetera, in order to allow that narrative to shift. And it's that meandering shift in narrative and investors in a staggered way as different investors come to believe there's a shift and develop confidence in that shift at different times, there's a shift in allocation. And those flows then drive divergences in prices that trend following managers take advantage of. One might argue that trend following is mechanically designed to, especially intermediate to long term trend following, is mechanically designed to profit from these kind of diffusion of shifts in expectations about inflation and growth. So, where you've got a passive all weather, not taking a position, just equally anticipating inflation and growth regimes at all times. Trend is a nice little overlay that takes advantage of changes in expectations that go on between those different regimes and, help to offset the fact that if diversification means always having to say you're sorry or always having regret, obviously you can't be in all four regimes at once. So there's always going to be at least one asset class that is disappointing you and other asset classes that you might have allocated more to that are doing better than you'd hoped or expected. And that causes regret, right? So you could imagine a scenario where adding trend helps to alleviate some of that regret because as investor expectations are changing, we're reducing exposure to the regimes that investors are abandoning and experiencing some of that appreciation in prices where investors are reallocating their capital to.